What's going on, good people? We are back again with another video to provide you guys some information on just making you better and understanding what's going on in the real estate world. So as always, I am Joseph McLemore, aka the Champ of Real Estate. I got my partner, Jay. It's all good. Goodwin here with me. What's going on, bro?
What's going on, bro? You're another one. Let's give the people some knowledge.
As we guys have introduced ourselves before, once again, we are with On Time Realty Solutions. We are a solutions-based company that helps people throughout the United States figure out whatever their real estate needs are. Today, we are focusing on going over what is called the California Mortgage Relief Program. This is going to be more for any particular homeowners that are based out of California, which we deal a lot with people that are dealing with foreclosure. We want to go over the basics of this program to see if it is something that may benefit you, because like we said, we speak to thousands of homeowners every day, and a lot of people don't even know that this program exists. And this can be something that's beneficial to you if you're dealing with some type of hardship, maybe looking at losing your home through foreclosure. We're just going to go over the details and kind of help you guys out, okay? So going over first, the California Mortgage Relief Program. What is it? Okay, this is a state program that is operated by the CalHFA Homeowner Relief Corporation. It's a government-funded program that was put together to help anyone that was dealing with a hardship that came from COVID. Okay, everybody I know has had some family, whether it be a family member, friend, or personally has been affected by what happened during the pandemic, whether it be losing your job directly, knowing a family member that lost their job. Maybe you had a family member get sick and you had to help take care of them. You probably affected. So this program was actually created by the government, and they basically sent out funds to each state to help people that were going through these type of hardships. And essentially what they'll do is they'll pay up to 80,000 of your arrears to help you basically get caught back up and get back on your feet. This is a free program. You don't have to pay anything to sign up for it. And this is not a loan, it's a grant, so you do not have to worry about paying this back. You just got to figure out if you meet the qualifications, which is what we're going to kind of cover for you today. As I mentioned, this fund provides up to 80,000 in assistance to eligible homeowners with whether it be a past due mortgage payment, missed property taxes, a partial claim, and loan deferral taken during or after January 2020, even people that may be dealing with reverse mortgage issues. So who's eligible? Essentially, if you missed at least 2 payments on your primary mortgage and are currently past due, you can be eligible.
You have to miss those 2 payments before March 2023, before March this year. You missed them after, unfortunately, you're not eligible. But if you missed those 2 payments before, then you're eligible anytime before and by the original date of this, when this program was put into effect. You missed a tax payment, 1 tax payment before, but we're primarily focused on mortgage payments today.
Exactly. And glad you brought that up, because they actually extended out the dates because they had more funds still sitting in the pool, so they extended those dates out. So as my partner mentioned, make sure you're keeping track of what your dates were when you went past due. Unfortunately, if it was after the March of this year, you unfortunately won't be able to qualify. Okay. So what are the basics? So like I said, you can qualify up to 80,000 in funding for your past due mortgage. First and foremost, you have to be facing some type of pandemic related hardship after January 21st of 2020. So you're going to have to describe this hardship to the program. This is going to be part of what you have to fill out and sending it in when you're setting up your application. So it has to be some hardship that deals with them. It can't be, you decided to quit your job, you wanted to make a career change or something like that. It has to be something that created a hardship from the results of the pandemic. Okay. Second thing, and this is a big one, not all loan providers are part of this program. So your loan or mortgage provider has to be signed up with this program. All right. We're going to include the link below in the video that goes straight to the website for the program. And there's also a link within the website that will let you know what banks qualify for this program. So make sure you verify that as well. Financial requirements, Jay, I'll kind of let you take the lead on this one and chime in with you.
Yeah, the financial requirements is that you can't make more than 150% of the median income in your particular area. Median income could be different county to county out here in California, as we know that. Like I'm in Contra Costa County in the Bay Area, our median income is higher than say Sacramento, which would be Sacramento County. You can't make 150% of that, or unfortunately, you don't qualify. Because this program is meant to help people that are in, basically middle class people. They figure if you make that much money, then you probably don't need help, or you shouldn't need help. That's the way they're looking at it. So it is primarily designed to help more of the middle class person. So just to give you an example, if your median income in your area is 100,000, this is household. This is everyone in that household put together. So if you have a kid there that's 18, that still lives with you, that's working, you add his income, his or her income, it can't hurt you. Say the median income's 100,000, but you guys make 150, you won't qualify. So that's basically the gist of it. We'll link the website below, like my partner said, and then on the website it has a map of California by county, and it tells you the amount of the median income and what you can make to either qualify or not qualify. So it'll be on that website link below, so you can go check for your particular county.
Second thing, as a homeowner, you cannot have cash assets on hand, excluding, of course, your savings, retirement account. We can't have cash assets on hand that's equal to or greater than the relief funds needed plus 20 grand. Okay. So essentially, if you owe 30,000 or that's what you need essentially, and you got 20,000 in the bank, or you got 50,000 basically altogether, you won't qualify for this program. Okay.
Right.
Yeah.
Like
So
I said, it's designed to help people that need it the most. So they're weeding people out. And we know, unfortunately, during the COVID with the forbearance and all that, it was people that was getting over on the system and taking advantage. So this program is not designed to help those people. It's designed to help regular people that really had a hardship from COVID that got in a bad position. That's what this program is designed for.
Exactly. Yeah, because like my partner said, we know there's a lot of people that was taking trips or doing extra with that extra money that got pumped into the economy to help people. You know what I mean? It's unfortunate, but it's real. So this program, they're trying to kind of nick that in the butt right off the gate and stop anybody that may be taking advantage of that. So that's a key thing. And it makes total sense, because if you have the money to pay them. Get yourself out of hardship, send that money over and get them paid. But once again, this is more for the people that have no out to get out of the situation. Okay?
Right.
So next thing, your property requirements. First and foremost, you have to be a homeowner that's currently in California. The property that is facing the hardship has to be your primary residence. It can't be a secondary home. It can't be a vacation or a rental home. It has to be where you lay your head, and it has to be the one that's facing hardship. Okay.
Exactly.
Yeah. The second thing, I'll let you kind of touch on this one, Jay.
And it just got extended in March. Like I said, they extended it and they opened up the requirements a little more to try to use all these funds that's at their disposal. Because if not, just it goes back to the feds, which is where it came from. So California got a lot of all these funds. California got the most funds out of every state. So they have to use these funds up. So I guess when they looked in the program and they weren't being exhausted, which I think is due to a lot of people just not knowing about the program. Because we talk to people all the time, provide free counseling to them, and we mention it, and they're like, "Oh, what are you talking about?" They don't even know. So once they seen all these funds weren't being exhausted, they kind of expanded their requirements. So now it used to just be, if it's a single family home, now it could be 2 units, a duplex, triplex, or quadruplex. So it'd be up to 4 units. You can still qualify as long as you meet the other requirements. So they extended that out. You can double dip now. So say last year you used it, and say you're only in arrears like 20,000, and then that got paid. Each person can go up to 80,000 per household. You didn't maximize your 80,000, so you still got 60,000 left. So now you can go back in case you need them again, in case you thought you were out of the hardship, or you underestimated the problem you were in and you didn't get out of it all the way and you're slipping back in, or you slipped back in. Now, once they expanded the program in March, now you can double dip and go back in. Before that, it was if you used it once, whether it was 5,000, 10,000, 20,000, That's it. Now they're allowing you to go back, so you still might qualify. So for those that's hearing this, that say, "Oh, I used a program a year and a half ago. Oh, I'm out of luck." Nah, not now. I don't know if you're aware of that. But now you can go back and double dip. Now, if you maxed out that 80,000, then no. But if you didn't max out that 80,000, then you still can go back in now due to the new requirements. Going back to that 80,000 limit, unfortunately, say you're in the rears 90,000, and then you go to them, go apply for the program, figure, oh, I can get to 80. I got 10,000 on hand. I'll put it together and take care of it. Unfortunately, you won't qualify either. What you owe the bank has to be 80,000 or under. That's what a lot of people don't know. So you can't combine your funds with it. Oh, I'll put my 10 with that 80 and I pay them their 90. Unfortunately, you won't qualify. Now, one thing you can do is say you owe 82,000. You can go to the bank and say, look, especially if it's a participating bank, which it has to be, as my partner alluded to earlier, and say, oh, if I could get this, to 80, under 80 or under, then I qualify and you guys get your money. So the bank might work with you to set something up, but it can't be over 80,000, or unfortunately you don't qualify. It doesn't matter if you have the rest of the funds to put with it. This program won't fund any rears that are over 80,000.
So no, perfect. Great reiteration on that too, Jay. So then lastly, what are the required documents that you need? Now, we all know each person's situation is going to be unique. So the bank and each entity is going to be unique. So you may or may not need to require different documents, but at least the main four you're going to need to bring to the table is going to be your mortgage statement, your current mortgage statement, your current bank statement, current utility bill, and then, of course, income documentation. So whether that be pay stubs, W-2s, or even unemployment documentation, you're going to need to bring that to the table as well. Okay.
And if you're self-employed, which a lot of people are,
oh, yeah.
you already know if you're self-employed, getting any type of financial, a loan, anything, it's always a lot more documents required. I will tell you, if you're self-employed, you will be required to make a profit and loss statement. And a lot of people have trouble doing that. So you got to go see a local accountant, and it doesn't cost a lot to get them done. The first time I did a profit and loss years ago, I never even heard of it. I had to do one. And then I just went online and did it, and it actually came out well. I just went and Googled it, how to make a profit and loss. If you're not able to do that, reach out to somebody you might know that's able to help you. But if you're self-employed, they will ask for a lot more documentation, and I guarantee you, outside of the 2 years tax returns, you will need a profit and loss statement, guaranteed.
And that, like you say, that goes back to that point we made earlier. Each person's situation is going to be unique, so be prepared for those loopholes. But it goes back to something we said in our earlier videos. Knowledge is power. You want to learn all of your options as quickly as you can, so you can pivot and make the right decision for you and your family. So, if you're trying to keep your home and avoid losing it, or you're thinking about selling, the faster you arm yourself with this knowledge, the faster you could pivot and figure out what's going to work out best for you. Because, if you're staring down the barrel of that auction date, that's coming up, and you aren't moving because you're in shock, you're in denial, you're frustrated, which a lot of people we talk to are all going through these things, you're going to lose leverage in what you're able to do. Okay. So if you're seeing this, take this as a sign to get your head out the sand. Stop thinking about what's the worst that can happen. Start planning and taking back your power. Okay.
Right. Be proactive. Speaking on qualifications and non-qualifications, also, if your original loan was a jumbo loan, you don't qualify, unfortunately. Now, if you don't know what a jumbo loan is, just real quick, it's basically over a certain amount loan. In most states, it's like $760K. Anything over that is a jumbo loan. In California and like Hawaii, a couple other more expensive states, New York, jumbo loans, the limit goes up. I think in California, it's like a little over $1 million, which still is not going to get you a whole bunch of homes here, but still, that's still considered a jumbo loan. And unfortunately, you won't qualify for this program. They figure if you can afford $1 million house, then, like I said, it goes back to where they're trying to. It's a gray area. They're trying to help people that need it the most. So that's another thing. If you had a jumbo loan, unfortunately, you won't qualify.
That is pretty much the basics of what the California Mortgage Relief Program is. as always, like we said, I'll have all the links down in the video below so you guys can click, find out more information. Don't hesitate to go figure it out for yourself too. Google this program, look up some YouTube videos, look up reviews, how it's helped people or the difficulties that people may have faced while doing this. But once again, we always say arm yourself with knowledge so you know what's going on.
One more thing is they're not going to cut the check to you. If you
Oh,
do
yeah.
qualify and go through the program and get approved, the check goes directly to the lender. A lot of people think, oh, I get this money, they're gonna, if I owe 45,000, they're gonna cut me 45,000. I put it in the bank. You know, some people might think, oh, then I can negotiate my terms lower with the bank and keep a little money. Like, no, it's not gonna work like that. Like, whatever you owe the bank down to the penny, that's what this program cuts directly to the lender. So just to let you know that for the last thing.
And I hope y'all not thinking like that to do this, because that's probably what that's what helped get some people in the situation.
So. I had a reason why, because I had a guy ask me that. Actually, that he mentioned it, like they're gonna give me the guy in Sonoma. He actually asked me. Yeah, he thought. I'm like, no, I'm sorry, but it doesn't work like that. The bank will get the money, though.
Going straight to the government, and the bank is communicating directly for this. So be prepared for that. Once again, we appreciate you guys checking out our video, however this has reached you. We hope it's helping in some way, shape, or form. Please make sure that to help as many people as possible, click like, subscribe, share this video with somebody that may be going through the situation so we can provide them information or help. As always, if you want to connect with us, all our info will be down below. Reach out to us. Our 800 number is down below. You can set an appointment through our website for something that fits you guys more specifically. Do not be afraid to reach out or be ashamed. A lot of people, like we said, when they're going through this, they're kind of ashamed of what they're going through. And we just want you to understand that you are not the only one going through this. There are literally every month, literally I would say in my county, in LA County and things like that alone, there's about 300 foreclosures going on. There's hundreds of thousands going on.
Nothing to be ashamed of.
Nothing to be ashamed of.
Nothing you can't recover from.
Exactly. Especially with the knowledge and peace of mind that we're willing to help provide, get you out of the situation. So don't hesitate to reach out, schedule an appointment, leave a comment if you want to answer a question, however you want. If you want it to be private, we know how to, we know how to do that as well. So, but please reach out and don't just sit still. But as always, we are here at On Time Realty Solutions. We are here to help you, help yourself. And we look forward to, speaking to you soon. But until next time, y'all take it easy, stay blessed, and peace.
Easy, stay blessed, peace.